Hello and welcome to this week's edition of Murphy's Market Minute with Elliot Obenson, and
Nathaniel Vossman.
it's been a pretty good start to 2026, wouldn't you say?
I'd say so. Things looking pretty strong.
Yeah. Markets hit new highs.
Yep. S&P right up next to 7,000 right now.
Yeah.
Real close. 60, 69, 65 right now.
Yep. Jobs for December came in lower than expected at 50,000. They were expecting 70,000.
Yep.
Now, something you might find odd is that even though the jobs came in lower than expected, unemployment dropped.
Yeah.
It was high at 4.6, which I think was higher than it had been in like maybe 4 years or so.
Yeah, I think since 2021.
Yeah. And that's dropped to 4.4.
Yep.
And then another thing that I think is really neat that's happening is oil's down below 60 a barrel. There are predictions that WTI, West Texas, could hit 51 and some change per barrel. But then they expect in 2027, through 27, 28, because right now there's a glut of oil on the market. And they're expecting that to go up over 75, 80 over the next 2 years, 3 years.
That'd be a pretty big jump.
Yeah. Just because, there's a price point at which most oil companies struggle to be profitable. In the U.S., it's $50 a barrel. In Venezuela, which is a topic in the news lately, it's more like $80 a barrel
For them to
be profitable. Yeah,
Wow.
because it's a thicker, heavier, and requires more advanced refinery processes.
Yeah.
Which all that refining for the most part gets done in Texas. They usually ship it up here, get it refined here because we have the capabilities and whatnot to do it.
Yeah.
Not that anybody expects Venezuela to be pumping a lot of oil anytime soon.
No.
So, anyways, yeah. So unemployment's down.
Yep.
Now that impacts interest rates probably. Most people don't think that the Fed's going to cut interest rates anytime soon.
Virtually like no chance of a January rate cut. I think it's about 5% right now.
Yeah.
Which is virtually zero.
Yeah. And I did hear something. I should have looked this up, that building is actually doing better. Construction.
Oh, really?
Yeah. Now, there's also a lot of talk in the news of corporations buying houses, and the administration wants to prevent them from being able to do so. From what I've been able to see, best estimates are that major corporations own somewhere between 1% and 3% of single-family homes in America. It's not a significant.
Yeah, that's lower than what you would think.
Yeah.
Based off and I don't know the data on that, but yeah, that's lower than what I would think based on what you hear online.
Yeah.
Like the scary.
Yeah, and I hear some very interesting arguments that I feel like are lacking a lot of knowledge about just basic economics. A friend of mine was talking about these neighborhoods in Kansas City where they would buy these homes, rehab them, and then they purposefully overpay for a number of homes in the area to drive comps up.
Yeah.
So it raises the value of all the homes. The problem is that anytime somebody in the marketplace is artificially increasing rates, what does that do? It opens up a sector of the economy for somebody else to come in and undercut them. This is what keeps balance, right? You can't just come in and, price bottles. I mean, you can price bottles of water at $10 a bottle. You're going to have a certain segment of the population that likes to shop at Whole Foods and Erewhon, right? But that's not the majority of the population.
No.
They're not interested in overpaying for things when there's a competitive advantage, which is the fact that you just artificially increase prices that allows me to come in and undercut you.
Yeah.
So I'm not exactly, and I've tried researching that one a lot, and I just can't see where there's any real case to be made that corporations buying single family homes is that big of a deal. But it's always good to attack corporations, I guess.
Yeah, that's what people love to do.
Yeah.
That's the fun part.
Yeah. So I think that from what I can see, the housing market is actually upticked a little bit. The stock market's up. Unemployment's down.
Yeah, I mean, the economy looks pretty strong.
The U.S. economy is outpacing the global economy by 2 points.
Yeah.
I think.
Yeah. So that's part of why rate cuts are kind of being put on pause, even though we're still historically on the higher end.
Yeah.
But
and by historically, we mean in the last 20 years.
Yeah, in the recent history, yes.
Yeah. Yeah.
which is more.
I'm older
applicable.
than you.
Yeah. Well,
I remember when
I just
in the
feel like-
80s you were paying 13% or 8%.
Well,
You thought
recent
8% was
history.
good.
But I feel like more recent history is probably more applicable to today's economy versus 80s, 70s. Whatnot.
Yeah, 80s. You're so old. Anybody that remembers the 80s, you guys, Nathaniel's calling us all
a
old.
little bit out of hand back in the 80s.
Yes, they were.
Just a
Wildly
little bit.
out
Like
of
we
hand.
talk about rates being high now, but then you look at a chart of like actual like last 50 years since, like today seems like nothing.
Yeah, absolutely. Anything else that is interesting that's going on in the economy? I can't think of
I
it.
don't know if you wanted to talk at all about the tariffs. I mean, it's a whole.
Oh
it's a
yeah,
whole
that
nothing
could
burger.
be. Yeah, it's a wild unknown, right? Because we don't know how that'll impact. I don't think it's going to impact anything one way or the other, personally.
Yeah. Well, I don't think it will either because, I mean, even if the courts do rule against the tariffs, there's other ways we can keep those tariffs in place, and then there's also not a clear path on like how much would have to be reimbursed of like what importers have already like paid with tariffs.
Yes.
Because like technically we'd have to refund that money. But then I'm hearing from like Scott Bessent that, it might be like a partial refund. So we really don't know. It's one of those things that you won't know until you know.
Yeah. And
even then, like they might rule against it, but the end result is the same as what we got now. So
yeah. And inflation's already like what, 2.7 still?
Yeah. It's above the target, but it's like well
Still,
in control.
Yeah, it's under.
Talk about recent.
It's under
history,
3, so
it's on the lower end.
Yeah. So if tariffs are having an impact on inflation, it's being offset by something else.
Yeah.
And to be honest, I think a lot of things is being offset by the price of oil. I think oil being where it's at is going to be a huge driver of the economy.
Yeah.
Energy is kind of like the foundation of everything.
Oh, yeah.
Cheaper energy means cheaper shipment of goods, cheaper manufacturing of goods, all these different things.
Every step of the process.
Yeah.
From manufacturing to when it ends up at your house.
Yes.
Good.
Yes. And so just having cheap energy really does a lot to create affordability and whatnot.
Yeah, 100%.
So, yeah. So maybe those polyester clothes you buy at Walmart for $5 a t-shirt will go down to $1. Who knows? Yeah, I don't think people realize how much of what they're wearing is made out of oil.
Yeah, 100%.
So, all right. Well, I think that's everything for Murphy's Market Minute. So until next week, this is Elliot.
Nathaniel.
Signing off, guys.